Developing a major blockbuster video game requires hundreds of millions of dollars and years of labor. It is a massive financial gamble, and a single high-profile failure can push a studio toward bankruptcy. To survive in the modern entertainment industry, a publisher needs a financial floor robust enough to completely remove the risk of development. Take-Two Interactive has reached that scale, generating $6.7 billion in net bookings in fiscal 2026. This scale is built on the back of massive cultural properties. Grand Theft Auto V alone has sold nearly 230 million units in its lifetime, establishing a continuous, captive audience. With an audience that large, Take-Two operates as a highly predictable digital toll collector, insulating itself against the volatility of a traditional hit-driven release schedule. Investors often assume that video game publishers make their money primarily by selling $70 discs at retail stores. Today, the actual financial engine relies on what the industry calls recurrent consumer spending. Recurrent consumer spending now makes up 78% of the company's total net bookings. That 78% flows directly from players purchasing virtual currency in Grand Theft Auto Online, alongside continuous microtransactions in direct-to-consumer mobile games like Toon Blast and Match Factory. This direct-to-consumer pipeline provides a reliable, ongoing yield. It creates a stable revenue floor that sustains the company's operations during the multi-year wait between major console releases. Looking at the company's vital signs on paper, an untrained investor might see reasons for concern. For fiscal year 2026, Take-Two reported a GAAP net loss of $298 million. However, when looking at the metric management actually prioritizes, operating cash flow, the company generated a robust $624 million. This gap between paper losses and actual cash generation is the result of an aggressive internal push to expand margins and streamline operations. Management has launched hundreds of active AI pilots to reduce marketing and development costs. In one case, an internal promotional campaign that usually requires third-party agencies was created entirely in-house for exactly $0. Because the business generates high levels of cash efficiently, Take-Two can self-fund its pipeline expansion. They are able to pursue long-term growth without needing to dilute current shareholders. CEO Strauss Zelnick and CFO Lainie Goldstein recently laid out their financial expectations for the immediate future. The entire strategy for the coming year is anchored around the monumental launch of Grand Theft Auto VI, specifically scheduled for November 19, 2026. This fiscal year 2027 guidance chart shows how this single release alters their trajectory. Net bookings are projected to leap to between $8 and $8.2 billion, representing 20% growth. This top-line explosion translates into over $1 billion in operating cash flow. But during the earnings call, management also acknowledged the headwinds facing their existing portfolio. Recurrent consumer spending is projected to be completely flat in fiscal 2027. Specifically, mobile revenue is actively declining as several of Zynga's mature titles face moderating trends. This creates a high-stakes paradox. Their highly reliable recurrent financial engine is beginning to stall at the exact moment they need it to support the largest entertainment product in their history. Take-Two operates a highly efficient recurring revenue fortress that no longer relies solely on the next hit to survive. The bull case for the stock is straightforward. Grand Theft Auto VI acts as a massive rising tide, lifting the entire high-margin ecosystem and generating historic levels of cash flow. The bear case focuses on those cooling mobile revenues. If Grand Theft Auto VI is delayed or slightly underperforms, it could shatter their lofty fiscal 2027 guidance and expose structural weaknesses in their current catalog. The company now stands at a critical juncture, balancing the maintenance of an aging mobile ecosystem against the execution of a massive console launch. Take-Two has built the ultimate recurring revenue engine, but will it be enough to carry the weight of Grand Theft Auto VI? Which path do you think they take? Let me know in the comments, and be sure to like and subscribe to Stocks Simplified for more cinematic breakdowns.